Hello, this is Brian Shannon from Alpha Trends Blogspot. We're going to go ahead and take a look at some stocks for trading on Monday, October 22nd, 2006. And right now on the screen, I've got a daily chart of SanDisk, symbol SNDK. And I want to bring this up only because, last week Google and Apple got all the headlines, but, we are in the middle of earnings season and there's a lot of danger. And we have to really be aware, like I've been stressing, of when the company that we're trading is due to report earnings. Now, I don't always post that on the site. I'm going to try and do a little bit better job. And I appreciate the people who've been putting comments in with the dates. But the worst thing you want to have happen to you is be long a stock that actually looked pretty good on a short-term time frame as well as the longer-term time frame. Be long the stock, wake up, and then find yourself down 10 points the next morning. I'm more interested in being long a stock like Siga and finding it up 3 points. So be aware that there's a lot of risk in this market. We had Caterpillar blow up on Friday as well. We had AMD blow up last week, Apollo Group, APOL, CTXS. The point is there's a lot of danger. There's a lot of good stocks too. There's Google, of course. We had Apple with those calls, OSIP, AVCT, etc. There's a lot of good plays, but there's a lot of risk in this market. So let's go ahead and get started with taking a look at some stocks for for tomorrow. On the screen right here is American Oriental Bioengineering, symbol AOB. We've got a daily chart here, and obviously you see what I like here is the fact that the stock was up on big volume a couple weeks ago, and it's consolidated on diminishing volume as it holds above this rising 10-day moving average. If we take a look now at the weekly chart, you can see that it's broken past a pretty good level of resistance near that $6 level, and I think it's probably headed for a retest of this area up here. This high up here is about 658 or 758 rather. We'll call our target $7.50. The way I'd like to get involved in the stock would be to buy it above $6.75. Above $6.75, I think you can make a good purchase of this stock and find some upward momentum. A stop that I would put in would be just below this recent low here, maybe near $6.58. So that would be a risk of about 17 cents. And looking for a target move up to about $7.50 makes obviously for a good risk-reward ratio. Next up is BEA Aerospace, symbol BEAV, BEAV. And according to the information I look at, they're due to report earnings on October 30th. I couldn't find the information on AOB, but these guys report on the 30th, so keep that in mind. The stock's been up on nice volume recently, low volume consolidation, and we've got this level of resistance that looks like it could be about to be taken out. Now, the weekly time frame, if we can get above that level, you can see that it could make for a pretty good run. I think up towards about $27 a share would be what I think is a conservative target on the upside for BEAV. But here's how I'd like to see this stock develop before I would consider a purchase. The high on Friday was 24.51. I'd like to see it take that high out, make a higher high, put our stop under here, so we have a nice uptrend with higher highs and higher lows if it breaks past that level. And then targeting $27 a share. I think you buy it at 27.51 plus basically, and stop at 27.22. Next up is ENZN, and ENZN is the symbol for Enzon Pharmaceuticals. You can see a nice tight consolidation in here. Let me change the scaling so we can see a few more days. Just tighten the chart up a little bit, and now we've got going back to April. Anyways, you can see that it's got some resistance near this level, and if it can break past this area, I think the stock's headed up towards a test of these highs near 9.25. So on a 10-minute time frame, you can see it's got some resistance in here recently at the 845 level, and I think breaking past 845 is where I would consider a purchase of the stock. I'd put my stop underneath this low right here, so I'd put my stop at about 833 or 834, right in that area. And again, targeting it so that's about 13 cents of risk, targeting about 9.25 on the upside. That'd be about 50 cents. So it makes sense on a risk-reward basis. Next up is REDF. Now, REDF, these guys are due to report earnings. I've got on the 26th. Enzon, by the way, is October 31st. 31st. So Enzon reports on Halloween. REDF. Again, here, same type of pattern, nice uptrend. Now, in the 10-minute time frame, I think getting past $16.70, above $16.70, I would consider it for a purchase. I'd put my stop about 16.45. So, risk of about 35 cents or so, 25 cents rather, and I'd be targeting the declining 200-day moving average up near about $18 a share on REDF. Next one is SGTL, Sigmatel. These guys are due to report earnings the 24th after the close, so that's, I guess, on Tuesday, so be careful with this one. They're due out real soon. But, the stock just broke past some resistance and is consolidating nicely, consolidating those gains nicely on a diminishing volume. We've got this prior level of resistance looking like it's acting as support. We've got a rising 10-day moving average above the 20, above the 50, and it looks like this stock could head up toward, close to that $7 level where it had this prior level of support in here for a short period of time in May, and also where we've got that declining 200-day moving average in here as well. So that'll be our target. Let's call it $6.75 to $7 a share on SGTL. The way I'd like to play this stock would be to buy it above $5.75. That's just these little intraday highs here. Put my stop at about $5.52. And again, targeting that, about $6.90. Be careful though, again, earnings due out October 24th. I've got another good little stock, low price stock that I think could make a nice run here. I'm going to mention that one very last. And on the short side, looking again at Boom, Dynamic Materials, symbol Boom. Full disclosure, I did buy puts in this stock on Friday, and I think it's headed for a disaster, or at least I hope it's headed for a disaster. The stock's had this, phenomenal uptrend. Everyone knows the story, and now it's been holding below this uptrend line here that's been in place for a while. Now on this weekly time frame, you can see it's also below all the moving averages, the 10-week, the 20-week, the 30-week, the 40-week. So it's below all these big moving averages, the 200-day moving average right there in the same place as the 50-day moving average. And it's closed back below the 10, the 10's below the 20. And we hit this stock very nicely back in here and covered it right in there about 3 weeks ago. Now it's rallied up on diminishing volume, and it looks like it's ready to fall once again. As I said, I do own the puts, so I have an interest here, but I'm probably going to short the stock as well once it breaks below this little low in here from Friday. Now that's about $30.80. So I'm considering adding to my bearish bet on this stock. We've got a declining 5-day moving average, which I always like to see. And I would do that by selling short this stock below $30.80. As far as my risk goes, I don't see any reason to risk above these highs right here, so at about $31.20. And as far as a downside target, I think that you're looking for probably 28.5, 29 just to tie those lows. But hopefully we could get a real disaster and see it fall down to $25 a share. These guys are due to report earnings November 1st, so I'm planning on trading most of it out before that earnings report. Hopefully the stock is fallen dramatically before that, and maybe I'll hold a couple puts. We'll see what happens. PPDI is another stock that looks like it's on the verge of breaking down from a longer-term uptrend. And here this stock has had a phenomenal rally over the last 3 years, running from $12 a share up to 42 or so. And now it's starting to show resistance along this declining 50-day moving average. So on a 10-minute time frame, you can see that it had some troubles back over here, kind of been bouncing around, volatile. It sold off hard Friday afternoon, so I don't want to sell it short here. Instead, I want to see it rally up to about $35.70 and then sell it short as it drops below $35.55. So rally up to $35.70, then sell short below $35.55, and my stop would then go at $35.90, so right around here. Doesn't have to go above that level, but I think $35.90. And I'm looking for the stock to drop back down towards $33.50 to $34 a share. Kind of basically come back down towards these lows once again, where it's had some support. And that symbol again is PPDI. Earnings were released already, and they were a penny less than expected. So there appears to maybe be a fundamental reason why someone would want to get out of this stock that's been doing so well for the last few years. That might be a good excuse to take profits. And if profit taking comes in from some big institution, it could drive some real panic in the stock, and we could see a nice disaster. So that would be good to see, obviously. BKHM is the symbol for Bookham, and Bookham is a low price stock here at $3.50 a share about. I think it can make it up towards about $4.25, $4.30 or so, and I'm considering a purchase of the stock above about $3.75, and I'd risk, I think, about a dime on that trade.